Traders, what's going on, guys? It's Kyle from K Capital. It's about 7:20 on the 19th of April. It's been a pretty awesome week. I wanted to go through, or 2 weeks or 3 weeks, I should say. A lot to catch up on here. It's been about 2 weeks since our last video. The first thing I wanted to do, like we typically do, is go through the overall market, see where we're at from a macro standpoint, what the technicals on the SPX, the Dow, and the Russell are telling us. Then I want to go through two winners that we had recently. And then finally I want to go through our current positions just to get a sense of where we're at in the open market with our open portfolio. So with that, the Dow continues to surprise. It flew right through 1800, or tested 18,000 I should say, but flew through right strong levels of support and resistance, in the sense of I expected this to really drop back down to the 200 day moving average. It did not. It blew right through this level of resistance and continued all the way up to 18,000 today. Frankly, I'm still very bearish. I think the overall sentiment across the entire market is really just a bearish sentiment, in the sense that a lot of the fundamental factors are really just pulling against the market, in the sense that we're due for a pullback. And I think the fact that we have been trading below the 200-day moving average for the last 6 to 9 months on and off, is a sign that there's definitely a weakness when you compare it to where we were from 2013 to 2015. And right now you can see that, granted, we have now tested 18,000 in the Dow, but you look at this overall trend, a lot of these indicators are indicating several bearish things that I think are going to come to fruition. So the first is, we're really bounced hard from 15.6 all the way up to 18,000. We haven't seen much of a pullback in those 3,000 points in, now 4 months. We have continuously made new highs, and our EMA ribbon here from the 20 to the 50 MA is completely overextended now. If you factor in the major fact that we're hitting now resistance dating back all the way to the end of 2015, I think eventually we're going to pull back. Now you can make the argument that we've been saying that for now 2 weeks, but I think that there's going to be profit taking. There's going to be some macro indicator that's going to really flip, whether that is interest rates in Asia and Japan basically just completely screwing around with their market, or China doing the same thing, or the U.S. political situation. I think something's going to give here, and we're going to see a pullback and a continuation down across the board. If we want to look at the SPX, you see a similar story. We're making new highs, and we're starting to test this block of really, really strong resistance. Again, similar to the Dow, I expected a pullback at this point, but again, we haven't really seen that yet. But the indicators are the same. We're seeing a really overbought position within the EMA ribbon here. We are trading above the 200-day moving average, but unless we make new highs here and we completely clip 2100 to 2140, I don't really think we're going to see much more upside in the SPX because of that. And one thing you can kind of make the argument that is a leading indicator of the larger cap stocks is the Russell, which we have here. We broke through resistance here in terms of where we were trading in that consolidation pattern downwards. I expected to hit that and bounce down back to 1060, like I alluded to in prior videos. What you see though is today we definitely made a strong doji candlestick, really indicating that there is going to be some volatility, I think, over the next couple days. And how severe that is, I'm not really sure. I have to take a look at volatility to see exactly how that's playing out. But this is definitely indicating, I think, a change in direction in terms of the trend. If anything, I think we may test the 200-day moving average right around the 1118 level, probably by the end of the week. Whether we break that, obviously, just depends on a multitude of factors. But again, the major takeaway here is that we are trending down in the small cap arena, and that's obviously our bread and butter here. So with that, what I will do is go into a few plays that we were short over the last couple weeks and worked out really nice for us. For starters, we were short in Smith & Wesson. This turned out to be a pretty profitable trade for us. I kind of highlight some of the thinking here in terms of what we saw. But, you saw basically making multi-week highs here. We went short, just as the footnote kind of alludes to. Really locked in a nice gain as we saw this completely collapse down to the 22 to 23 range for, I think, a nice profit, in the $4 to $5 a share. So this was one short. That was definitely something that was pretty nice for us. I think we locked in finally here. I'm just going through my notes. A 12% return in this. So yeah, that was in the matter of literally 6 trading days. So that was good for us over the last couple weeks. The next was, let me go through SKYS, which was a beauty. We locked in, I think, 19 to 22% in this. Again, saw this hit against the 200-day moving average, saw the weakness the day after that, went short, I think right around 530 to 535, and really sold way too early. We got out of this, I think, at 425. We left at least $1 on the table. So I think a lot of our members actually stayed in this. So congrats to you guys for having the patience to really withstand the update here where we got out. We saw a lot of short covering on that day. I think it was the 7th of April. So yeah, congrats if you stayed in that. I think you're seeing more weakness today and Monday, which I think is going to indicate if this breaks this EMA ribbon of support, you could definitely see this thing trade back down to $2, which was our initial target. So congrats if you were in that. What else we got? So they were the 2 shorts we just closed over the last week and a half. One actually just opened today, kind of jumping ahead. But CNAT, pharmaceutical company, just ripped to new highs out of this ascending triangle pattern. Literally went from 2 to 350, hit the 200-day moving average, and just collapsed. This was on my watch list, I think, for 2 weeks as I kind of, stalked this pattern, and really we went short in the high 2s today. Again, initial target here is going to be $2. I think this definitely collapses and continues to really trade down. So it's one thing we're watching closely. I'm definitely going to add to this too. I think we opened a very much small position throughout the day just to kind of, get a feel for what was out there in terms of the shares available to short and any buyers on the other side of that trade. So one thing we are looking at, obviously, is, we have a risk reward already set up for this in terms of our level of support, where we will exit the position, and then we have our target, which our members get full details on before we trade via text and via email, as well as the nightly watch list. So that's our one short that's currently open. I have a watch list of 5 other shorts I'm looking at right now to kind of coincide with my thesis for the market. But conversely, I have a fundamental play here in terms of, really, this one could be huge. Sientra, SIEN. We are long this. We've been long this now for probably 4 to 5 weeks. So this is a swing trade for us. Our average, I think, entry price now is $7.76. So we're sitting on a decent profit. But this has huge upside. I didn't expect this long of a consolidation, I'll be frank, but I did expect this level to hold. And the reason I really got that sense early was, it made 5 waves up from 3 all the way to 10. The major wave within that, or the major candle, was this one here where you saw a huge volume spike. Really, what that told us is, okay, there's a lot of supply or a lot of demand here to pick up shares. So I've really been watching that level and make sure that that really has held, and we've been adding to this entire position all through this price level. We finally broke that late last week. So a nice rally all the way up to almost 9. And really, I think this is going to be the first wave up of many. The reason I say that is the fundamental story here is pretty significant. They have re-entered their products back into the U.S. and European markets. They pulled their products off of the markets themselves. They weren't issued any FDA warning or anything to kind of coincide with why they did this. And the stock just collapsed and went from 20 all the way down to, obviously, $2.50, $3. Ever since then, they've corrected their production issues, or I should restate that they are in the process of doing so, but have initiated, reselling back into those major markets. And really, all the reviews on these products are huge. The doctors that use the products that this company basically uses for plastic surgery, rave about them. So I think, we're going to test the 200-day moving average soon. I think once we do, we'll obviously probably bounce back a little bit. Might be a great re-entry right there in terms of a price level to add to. That said, my initial price target is 10 in the short term and in the $15 to $20 range in the long term. So this is something I'm obviously watching very closely, just given the fact that I think it could be a monster play. It has both the fundamental and the technical background to really support a higher price. So if you're in that with us, congrats. If you're not, I would definitely add it to your watch list to see if it's something you could be interested in going long in. Do your own due diligence, obviously, but I think it speaks for itself. And that's it. I was going to cover, I think, 2 other positions that we're in, but I'm going to cut it off a little short here. Actually, you know what? Why not? So the last one I'll cover, we're in 2 other positions, but I'm not going to get to those tonight. But STRL, or Sterling Construction, has been making a pretty consistent and beautiful channel trading pattern here. If you bought at both or sold short at the top of these trading channels or bought at the lows, you could have swing traded this pretty successfully over the last couple weeks. That's where we're at right now. So I think we're sitting on probably 15 to 25 cent gain, I think, right now. I think our initial entry was like 507, and then we added again at 513, I think. So there's still some selling pressure here that we've been kind of getting frustrated with over the last couple of days. That said, it's really been holding both the lower end of this trend level of support, I should say, as well as the 200-day moving average. So, I'm hoping for a test of 6 over the next couple of days. Again, it's something that I think is a pretty reliable pattern, or so it has been since last March. So again, something to keep an eye out for. We may continue to average in this price level in the hopes that if we see a nice break back up to 6 or 640. So that's all I got. That's all we got for tonight. Our members will get the nightly watch list with the updated positions that I'm looking to short or go long in, as well as more additional detailed commentary on the positions we kind of went through, as well as the overall market. Hopefully you have a great night, and if you have any questions, please, by all means, shoot me an email at kcapitaladvisors@gmail.com or kylematthew@kcapitaladvisors.com. We'll talk soon, and have a great night, guys.